Hello everybody, welcome back to another episode of The Lunch Hour, brought to you by Constant Collab, where we eat, sleep, and breathe finance, news, and everything in between. So if you like finance, news, or crypto, make sure to subscribe. There was certainly a lot going on in the crypto market over the weekend. It was looking extremely ugly. I mean, sentiment is at one of the lowest levels, that we've seen in 2021. There was certainly a lot of selling over the weekend, but we are going to cover all of that, everything that happened over the weekend. And with that being said, let's dive in. So like always, we are going to start by looking at the overall crypto market. Right now, the crypto market is sitting at $2.267 trillion. The overall volume remains pretty high at 129 billion. Bitcoin dominance continues to go down. Currently, it is sitting at 40.8%, and Ethereum keeps ticking up. Right now, it's sitting at 21.5%. So, like I said, well, right now, the crypto market is sitting pretty flat, up about almost 1%, 0.75%. So right now, Bitcoin is sitting at $41,183. It is up 1.5%, down 14% for the 7-day period. That is, I mean, that's horrendous. But Ethereum was able to regain the $4,000 level. So right now, it's sitting at 4,162, up 1.25%. Still down for the 7-day period. Pretty much everything is down for the 7-day period. Very few projects are up. Let's see what else. Solana's up 1.5%. XRP is up 0.1%, down almost 19% for the 7-day period. Terra has gone on a tear the past few days. I think it was the only project that was up over the weekend, and it is up almost 28% for the 7-day period. Again, that is one of the few projects that is up for the 7-day period. Let me see. I just saw Polygon Matic is up almost 70% for the 7-day period, but it's down today. Let's see. Yeah, I mean, as you guys can see, pretty much everything is down for the 7-day period. In the top 20, there's only 2 projects that are up. But with that being said, let's dive into the news. And the very first article that I want to cover is actually a stock market article. So the Dow jumps 600 points as Monday rally accelerates. Investors look past Omicron threat. There was a lot of discussions that everything that was going on in the cryptocurrency market had to either do with Omicron or the Fed tapering in their bond buying. So and inflation concerns and whatnot. But as you guys can see, certain the stock market is up. However, those risk on assets such as tech stocks like Tesla, Facebook, most of them are down currently. But reopening plays such as travel, gas, oil, all of them are moving up because there's conversations that Omicron might not be as bad as people actually expect. But diving into the article, the Dow Jones Industrial Average jumped on Monday as the Nasdaq Composite lagged as investors look past the emerging threat of the Omicron COVID-19 variant, rotating out of high-priced technology shares into names linked with the recovering economy. So that's what I'm trying to say. The tech stocks, they're hurting, obviously. But Omicron and this new COVID-19 variant might not be as bad as people think that it is. So that's why reopening plays are more attractive to investors right now. But and unfortunately, the crypto market currently is still correlated to, I don't want to say the stock market. I want to say more like the Nasdaq, the technology plays, those risky plays that they have high reward, but they're obviously riskier than everything else in the stock market, like the Dow and the S&P. But Here's what's influencing the markets to start the week. Shares linked to the economic reopening gain in Monday trading, like energy, industrials, and airlines. Investors continue to sell tech stocks with relatively high valuations. Those shares dragged the market down to a losing week on Wall Street last week. The 10-year Treasury yield rebounded after falling last week amid the Omicron threat. A lot of people were buying into Treasuries because they were afraid of the inflation and the Omicron. There was a lot of uncertainty in the market, so people piled on into Treasuries, and the 10-year is one of the most traded ones. There is a major shift underway at the Federal Reserve to bring about faster end to its pandemic easing policies. I've had a lot of conversations with people, and I honestly don't think that will happen as fast as people think. Bitcoin lost $10,000 since Friday, including a sudden drop overnight from Friday to Saturday. The move showed decreasing risk appetite and is hitting related tech stocks. But yeah, that is all that I want to cover here. When it comes to the stock market, again, tech plays are definitely on the sell side. A lot of investors are trying to step away from risky assets, and that unfortunately includes cryptocurrencies. But looking at the fear and greed index, yesterday we hit 16. I think today when it updates this afternoon, I think we might go back up to either 18 or 20. This is a lagging indicator. So, unfortunately it updates like once every 24 hours. But if we go down here, we are at the lowest levels some of the lowest levels that we've seen in 2021. I mean, if we look back, like these are levels that we saw in July and in May. So I don't know if we're going to go any lower. There's people that are still calling, 29,000 Bitcoin. If we break the $42,000 mark, they're saying that we're going to go into a bearish trend and a bearish pattern. I don't see it. There's still a lot that the crypto market has to do, and I don't see 69 as being the top for this bull cycle. I just don't. Granted, we might stay between 49 and 50, 53, 55 for the next couple weeks, but I don't see us going lower than 45. I want to say 42 to 45. I don't see us going below those two numbers. But yeah, there's a lot of fear, and when fear gets overblown like this, and people start capitulating, I start looking for the market to turn around. There was a lot of fear between Saturday and Sunday, and even today, there's some fear in the market, but when people are fearful, I'm buying, and when they're greedy, I'm looking to take profits. I try to do the opposite that the market is doing. Granted, I take my emotions into consideration because I'm human, and obviously I was scared Friday night into Saturday morning. Like, I was terrified. I was like, what the hell is going on? But again, I did a show Saturday morning, which I rarely do, and I talked about people being over leveraged and overreacting to the sell-off and Omicron and inflation. It was just an overreaction, and at the end of the day, people got liquidated for being over leveraged, and I think that just cascaded the selling. But let's move on. BTC market starts Monday neutral after major weekend washout. Yeah, I mean, the entire crypto market is pretty much flat for the 24-hour period, as I previously mentioned. It looks like it wants to tick up to over 1%, but right now we're pretty flat. Let me see. So right here, Bitcoin began the Asian trading day with a slight price appreciation before dropping once again to the 47.5 mark as U.S. market approached opening time. It was a tumultuous weekend which saw nearly 10,000 shave of the price of Bitcoin and billions of retail loss liquidated. That's one thing that I talked about, and I mentioned that on Saturday morning when I did the show. I said that on Monday we were going to start getting articles about people getting liquidated, and investors and traders saying that escalated the selling. Following a 5% decline on Friday, Saturday saw the second largest single day event in the history of BTC market from the Elon Musk inspired crash in May. According to the data source from Glassnode, Bitcoin spot markets flushed to under 42,000. I think that it went to like 41.5, 41.2 on some exchanges. A 60% fall in just 30 minutes before bouncing sharply. So yeah, I mean, as you guys can see on this chart, this is one of the fastest dips we've seen in a while. So again, yesterday's liquidation cascade was the second largest since single day event of 2021 in BTC terms, bested only by the May 19 crash. So again, people get over leveraged, and then they get liquidated, and after their stop losses are breached, the exchanges forces them to sell, and that's what happened. That just escalated. And when you see wicks like the one that we saw from Friday into Saturday, that just rings liquidation to me. I mean, there's no other way to put it. But moving on, Omicron variant and inflation fears curtail crypto markets. Again, the narrative about Omicron and inflation, I think that triggered those liquidations, and the liquidations just accelerated what happened. I think that Omicron, I mean, scientists have already said that it's not as severe as the COVID-19 virus, like the original one. So this variant is less aggressive. It's more transmissible, but again, it's not like it's gonna spike hospitalizations or anything like that. It is less severe than the original one. Uncertainty over these issues have caused investors in traditional markets to withdraw from riskier positions, which carried over to more volatile digital assets. At one point over the weekend, Bitcoin plummeted over 20%, falling below 50,000 threshold to 42,000. Although it recovered to roughly 49,000 by November 5th, Bitcoin is currently trading just above 42,000. This represents a nearly 20% drop in the past fortnight, bringing Bitcoin's price and the amount invested in Bitcoin futures down to where they were in early October. Again, and actually right now Bitcoin is closer to 49,000. Yeah, 49,000. 49.2. So it's ticking up. It's ticking up slowly. 50 seems to be a number that at least it might be psychological resistance, not so much technical. I think that the technical one is sitting at 53,000. So if we break to 53,000, we're reversing the trend. So yeah, I think this is overplayed, and it's nothing to be worried about. Now, if we start breaking below 40, then I'll be a little more concerned. But right now, people are just overplaying this. Salvadoran Ecologist claims Nayib Bukele's Volcano-Powered Bitcoin mine will end in environmental disaster. So the Salvadoran Ecologist explained to Telegraph contributor Simon Tegel that developing a Bitcoin city next to a volcano doesn't make sense. Talking about building this city besides a volcano, it's like thinking you are rich because you live next to a bank, Navarro said. Navarro also detailed that geothermal energy is still a costly endeavor and won't be much better than using petroleum sources. Geothermal still costs more than oil. Otherwise, we would already be using more of it. What will end up happening is that we will just be buying more oil. So this scientist is definitely not happy about this Bitcoin city next to a volcano. At that time, Navarro dismissed the volcano. I guess this is back, when they were talking about when Nayib Bukele released the news about the Bitcoin city. At that time, Navarro dismissed the volcano-powered Bitcoin mining facility idea, as he wholeheartedly believed the facility will require more energy resources than just geothermal power. I am under the impression that Bukele doesn't really understand what's going on with the energy situation. Navarro told a reporter, "This is certainly going to complicate demand." Navarro also claims that the digital currency environment in El Salvador could attract drug lords. The Salvadoran Ecologist also says that the Bitcoin tender law was rushed and implemented without debate. If you have something good to promote, you propose it, you discuss it, and then you put your arguments. But that was not the case with Bitcoin, Navarro stressed to Smith Meyer. So, he's not happy about it. He's definitely not happy about building the Bitcoin city. So, yeah, that's what we have for that. And then DeFi vulnerabilities exceed those in traditional finance. Bank of International Settlement. The Bank of International Settlement, BIS, has warned that the crypto industry, as well as the broader non-bank financial sector, threatens financial stability and claims systemic regulation is needed. So, cryptocurrency DeFi has become the target for those, they all want to make the claim that cryptocurrencies and DeFi are able to pose a risk to the financial system. That is yet to happen. And again, in the past 3 weeks, cryptocurrencies have gone from $3.2 trillion to right over 2. We have lost $1 trillion in $1 trillion in market cap, and the financial system is yet to be affected. And these people, they just want to play that argument that the cryptocurrencies could pose a systemic risk. We are yet to see that, and until that happens, I think that argument is extremely invalid. No, I don't want to see it, obviously, but when banks and insurance companies that are, if those entities lose 80 or half of their market cap, it could trigger a financial collapse. And they're not talking about those, but they're quickly to want to blame cryptocurrencies and DeFi. It makes no sense to me at all. It makes zero sense. Until that happens, where cryptocurrencies actually pose a financial risk to the system, then I'm like, okay, it happened. But right now, it's that argument is not valid. It's never happened after losing hundreds of billions of dollars. In the crypto ecosystem, risks have so far surfaced mainly infrequent and sizable price crashes. Whether such fragilities are limited to the ecosystem or can spill over to the financial one is still unclear. Exactly. You see, that's the argument that I'm trying to make. That's yet to happen. Yeah, the price fluctuates drastically, but that doesn't affect the financial system, or at least the traditional one, the BIS said. But the potential for spillover should not be underestimated. No, and I don't disagree with that. Should definitely keep an eye on it. But right now, it's an invalid argument. The BIS has focused the majority of its warning against the burgeoning decentralized finance space, while the DeFi system appears to be operating largely within its own ecosystem. The BIS has identified a series of concerns. Besides giving rise to first-order money laundering and investor protection concerns, DeFi displays substantial financial vulnerabilities, the group added. This, it argues, parallel but exceed those in traditional finance. In turn, the BIS has taken aim at stablecoins, which are subject to classic runs. And again, that's yet to happen. Stablecoins, there hasn't been a run on any of them. Actually, when people want to go into, people in the cryptocurrency space, they want to go into a more secure asset, they go into stable coins. They're saying that people are going to take those stable coins and exchange them over to traditional fiat. That is, it's rare when people in the crypto community does that, and especially in large volumes. That rarely happens. So a run on stable coins, again, that's yet to happen. But moving on, BadgerDAO contacts hackers seeking settlement. Bitmar exchanges loses $200 million. DeFi is definitely has gotten hit hard the past the last few days, and I mean Bitmar got hit even harder. BadgerDAO smart contract remained paused following website exploit that cost users 120 million. As community pursues investigation and reaches out to the thief in hopes of striking a deal. And then Bitmar exchange suffered an even larger loss after 2 hot wallet private keys were compromised. A Bitmar focused DeFi protocol, BadgerDAO, had its website server compromised for roughly 2 weeks, allowing an unknown attacker to surreptitiously steal millions of dollars worth of digital assets from users of the platform. So they on Sunday, representatives of the DAO attempted to contact the party responsible for the theft using a message published in a transaction on the Ethereum network and on Twitter. To the actor, you've taken funds that don't belong to you, but we're willing to work with and compensate you for identifying this vulnerability in the systems. We're providing you with a direct line of communication to discuss a peaceful resolution without involving outside parties. I hope that they settle, honestly. At the end of the day, I mean that's what bad actors do. They still fund, but they're hurting people that a lot of times people are gambling, their life savings and stuff like that. Not that I recommend that, but they're just hurting people, and hopefully they're able to settle with them. According to a website set up to provide updates on the case, the group has enlisted blockchain forensic analysis platform Chainalysis and cybersecurity firm Mendiant to help with the investigation. The latest update said that BadgerDAO's DeFi service remained temporarily shut down. Smart contracts have not yet been reactivated, and therefore users remain unable to deposit, claim rewards, or withdraw from either the Badger app or at the smart contract level. Badger is working to ensure that the smart contracts can be safely reactivated without further risks to the funds. And then on other news, but similar, Bitmar Exchange loses 200 million in security breach. Founder and CEO of the centralized exchange Bitmar.com revealed on Sunday that the 2 of the exchange's hot wallets were compromised in a security breach that saw upwards of 150 million assets disappear on the Ethereum and Binance Smart Chain networks. Long story short, Bitmar will use their own funds to cover the incident and compensate affected users. We're also talking to multiple project teams to confirm the most reasonable solution as token swaps. No user assets will be harmed. That's great. Centralized exchanges, they're stepping up, and they're pretty much cutting their profits to make sure that users are not affected by it. And that's why insurance and security firms in the crypto space are definitely stuff that people might want to research, how they can invest some money in. That's not financial advice. I'm just saying that's something that I'm personally looking into, because I think that that's definitely a growing enterprise. And then Solana game MonkeyBall backs fresh capital from Alameda Research, YGG, and others. MonkeyBall, a decentralized play-to-earn gaming platform built on Solana, announced today that it had raised funds from several high-profile investors in a recently completed funding round. MonkeyBall receives fresh capital. In an official press release shared by Crypto Potato on Monday, MonkeyBall noted that it had managed to increase its list of backers, indicating that it had landed investors with a solid reputation in its first investment round. I actually talked about MonkeyBall a couple weeks ago. I think last week or the week before. But they got investors such as Alameda Research, New York-based venture capital firm Rainfall Ventures, Yield Guild Games, YGG, Gate.io Exchange, and the Boston-based multi-stage venture capital Drive by DraftKings. MonkeyBall noted that it intends to leverage the vast experience of Drive by DraftKings team to pursue its goal of becoming the next gen esport metaverse. So a lot of big companies backing MonkeyBalls. And then former Lyft executive joins NFT marketplace OpenSea. Brian Roberts, the former chief financial officer at ride-sharing startup Lyft, has joined OpenSea as CFO. Just one thing, I don't think Lyft is a startup anymore. I mean, that's a multi-billion-dollar company that's being traded on the New York Stock Exchange. According to Bloomberg on Monday, Roberts expressed optimism in OpenSea's prospects, likening the company's potential to that of eBay's in the mid-90s. OpenSea, the largest non-fungible token marketplace according to the block's data dashboard, has recently fielded investment offers from several potential backers at a $10 billion valuation. And then on other news, crypto community bets Cardano price to hit 240, up 80% by December 31st. This is, I don't want to dive into the article too much, but this is from CoinMarketCap's price estimates. I mean, right now the vote to see Cardano hit 240 by December 30th has 82,000 votes. So pretty much the voting mechanism works by taking the median price of all the votes and compiling it on the dashboard. So by this let me see. Yeah, 12/31/2021, the median vote is 240 and he has 82,000 votes. So yeah, that's why people see it. And then a month later, people see a gain of about 6 cents. So I mean, that's big. That's a lot of votes for Cardano right there at 240. So it could happen by the end of the year. I mean, 80% gain. And then India's richest man gives DeFi his seal of approval. Indian billionaire entrepreneur Mukesh Ambani spoke out in support of the upcoming cryptocurrency legislation, claiming the country could lead the global movement in blockchain and DeFi technology. Ambani, who is the richest man in the country and the CMD of Reliance Industry, spoke out in support of blockchain technology on December 3rd in a virtual Infinity Forum discussion with Alameda Capital founder Anjali Bansal. The event was organized by the International Financial Services Center Authority and Bloomberg Asia. So he said, blockchain is a technology I believe in. It's different from crypto. I think the smart token is making sure that you are creating transactions that can never be changed. Today it is a world where large companies get easier finance and small companies don't get easier finance. And the same thing with people. I think that will change. And that's definitely something that DeFi is aiming to change. People can take loans. Regular people can take loans backed by collateral. And that's no issue. And to his point, it is a lot easier for large companies to get loans or rich people to get loans opposed to, the average investor, the average retail investor. So DeFi is definitely changing that for companies and individuals. So that's great. And I think that India should, take a leap into blockchain, and definitely they're supposed to meet at the end of the week, the parliament, and talk about the new crypto regulation. And hopefully, it is something that is, not a complete ban on cryptocurrencies, but a comprehensive regulation that allows for innovation to thrive in the country. But with that being said, guys, that is all we have for the episode today. Make sure to like and share this video. Every like, every share, helps with the algorithm. We're trying to get this information out to as many people as possible. And remember, we are giving away an NFT. It is one of 1,000. Actually, it is one of 999 because one was burned last week. So, we appreciate everybody that tunes in and watch our show. And with that being said, have a good one and catch you guys on the next one.